Damn it, what was this yesterday? After the US inflation rate came out and were announced with 7.5%, we saw a huge dump and a pump and again a dump. And if you want to know more about this, stay tuned and watch the video till the very end. Welcome, nice trading bros and ladies. My name is Aiden and I will teach you how to dive into the world of trading, especially cryptocurrencies like Bitcoin and Ethereum. Yesterday, the US inflation rate came out, and around this time here, and after that we saw a nice little dump. Actually, you can say that we saw a kind of a fake out of this rising wedge. The dump was around nearly 4%. Then we saw again a pump to the upside after this kind of fake out. So it was around 5-6%. And then last night we saw again a dump and a breakout to the downside. Actually, we hit the price target of this rising wedge. It was around 42,700. So we came slightly lower to this point here. And now we are consolidating here in this green box in this area here. If you look on the 4-hourly, you can say that the big head and shoulders that is already forming. Sorry, a little bit of coffee. Very tasty. So this head and shoulders or this inverse head and shoulders pattern is playing out, and maybe we see in the next days a nice little pump to around the neckline of 45,600. The price target of this pattern is here at 58,000 US dollars. So this could be a potential pump from the breakout of the neckline of, where is it here, nearly 27%. This on leverage, huge gains, very juicy. But as always, be very cautious if you're trading on leverage, and no financial advice at this point here. Okay, let's pull out the EMA ribbon. If we look here on the 4-hourly, you can see that we are now found good support in this green support box and use the EMA ribbon also on as kind of support here. Also, you can say that we formed here on the 4-hourly kind of a double bottom. No, not a double bottom, sorry, M pattern. So double bottom is bullish, M pattern is bearish. So the price target, if this is seriously a M pattern, would be around let's do it like this. So this could bring us slightly below under our CME gap of 40,300. So the CME gap is between 40,700 to 41,400 from the last weekend. So have this in mind and watch if we see another break to the downside. If you look on the hourly Bitcoin chart, then you can see that we are now flipped into the red. Last night, and now are under the hourly EMA ribbon. So first we have to come over or above the EMA ribbon at 43,900, and then our big red resistance box between 44 and 45.8, nearly 46k. This is a very big resistance area. So if you look on the daily chart, so here you can see it a little bit better, that this red box always was support or even resistance. Resistance, now again resistance. Here you saw our death cross I mentioned yesterday. Now we use it again as kind of support. That is the 200 moving average here. We already use it here as support, and now use it again as support. So this support really has to hold, otherwise maybe the M pattern will play out and we see us again at around 40k. So okay, let's take a quick look at Ethereum very quickly. Delete this one here, maybe the EMAs. So at the daily, the slide above, use it as support, but we have to hold this line. Otherwise 3k could be again a potential bounce for Ethereum. In the 4 hourly, you see that we are between the EMAs, and at the hourly also as Bitcoin we are slightly below the EMAs. Here we got rejected and now try to broke the EMAs again. So if you come over at 3,140, then we maybe can see higher momentum. If you look again on the Wyckoff pattern, so actually we hit again this resistance line here, and are still in this phase B. So if this pattern plays out, first maybe the M pattern, then we see a correction to 40k. If this happens, a potential dump to the 30k level could happen, but we have to wait what time will bring us, and if this Wyckoff pattern seriously will play out. So okay, yesterday, as I told you in the beginning, the inflation rate came out with 7.5%, so that was the reason of this dump, pump, dump again. So 7.5% were slightly higher than expected. They expect the experts expect a rate around 7.3%, so it was a little bit higher, and actually the inflation rate is as high as since 40 years, since the 80s. It was not so high. So this is not a very good sign. If you look at the liquidations, So in the last 12 hours, yeah, most longs were liquidated because of the pump dump action. And no, where is it? Here is it. The fear and greed index is at 50, so as yesterday. So it's actually very neutral. So you can say that half of the people are still very in the fear, and the other ones are very bullish. But all in all, it's very neutral. Okay, so that's it for today. If you want to trade only for experienced traders, use my links in the description on Phemex and Bybit. Also, you can check out my link for TradingView if you want to create a pro account. There are different packages you can choose between, I think, $10 and $50 per month. But we have a lot of more stuff you can do on TradingView. Also, check out my little tutorial. You will find it on my YouTube channel. The tutorial about the TradingView mobile app for beginners, but also for, but more for beginners. Not if you're experienced, then probably you will know a lot of stuff I'm talking about. And if you haven't done it, subscribe to my channel, click on the red button and activate the bell so you will not miss out any of my new videos. That's it for today, guys. Thank you very much for watching, and we will see us in the next video tomorrow. And as always, no financial advice, always do your own research and your own due diligence, and never trust anybody except yourself. Peace out.